Hello traders, it's another live session with me, Wilson from Geldex. So today we'll be looking at developing a winning trading strategy. So on social media, I'm sure you might come across some traders debating on which strategy is the best to use, to succeed in Forex, all right, or which strategy is perfect for trading Forex. All right, so today we'll be looking at what a trading strategy is and tips, and also some advice to traders who are struggling to build up their own trading strategy. Okay, so first and foremost, someone may ask, what is a winning trading strategy? What is a winning trading strategy? So actually, a winning trading strategy is a decision-making system, all right, of consistently exploiting a statistical edge, all right, whereas ensuring proper risk management. Okay, so what I mean is you have a system, or you have a well-structured routine or a well-structured process which you follow anytime you want to execute some trades on your platform, and you aspire to earn some profits from that system. Okay, so let's look at three things. Okay, first and foremost, let's look at your strategy. Okay, your strategy has to have what we call an edge. What is an edge? All right, so in our last session I explained the fact that an edge is actually a statistical repeatable advantage, all right, which leads you to generating consistent gains from the market over a series or a sample of trades. Okay, so your edge may be a fundamental one or a technical one. So example, your fundamental edge is, let's say you have a process of gathering some macroeconomic data, deduce the strength or weakness of a currency, then based on that you tend to make your trading decisions based on them. So you decide to go long when you deduce the fact that the strength of that currency is strong, or you intend to go short when you deduce the fact that the strength of that currency is weakening. Okay, that is the fundamental edge. But a lot of retail traders are more stuck on technical analysis. Okay, so for the sake of retail trading, I'll be more specific on developing a technical edge. Okay, so with developing a technical edge is very simple. Okay, a lot of traders out there are so obsessed with perfection. So what I mean is, a lot of them are looking for the perfect system to be able to succeed in the market. I know that there are a lot of traders out there, when they start out small, when they start out in their early stages, what they intend to look out for is a system that never fails, or a strategy that never loses, or a strategy or a system that gives them guaranteed positive outcomes. So what they do is they go online, they research, they look out for the perfect system out there. Some of them adopt certain strategies, they apply it to their trading. When they encounter losses, they abandon that strategy and hop to the next one. Then the cycle continues. When they encounter losses, and then they abandon that one and then move to the next one. All right, so they are so obsessed with the fact that they want a perfect system to trade. But I must say that there is nothing as such. There is nothing like a perfect strategy or a perfect system or a perfect edge. All right, when it comes to trading, one thing you should note is that with trading, you are not looking forward to avoid losses. Okay, you are not looking forward to avoid losses. You are not looking forward to avoid the risk that is wired in trading. Okay, because trading is inherently risky. Okay, whether you like it or not, there is risk involved in trading. So what you have to do, or your job, is to what? Just manage risk. Okay, so what that means is you find, let's say you want to develop your strategy. Then let's say you pick up your charts, you go through some 1 or 2 trainings or courses on, let's say, market structure, and then you try to identify certain patterns, okay, certain repeatable patterns, certain patterns that you find them very promising. So for instance, a trader can through back testing, through analysis, through intense technical analysis or back testing, he's able to identify a certain pattern, okay, whereby when he sees that pattern, anytime he sees that pattern, all right, that pattern gives him a confirmation to what? To place a trade. Okay, so if he sees the pattern pointing to the top, it's a sign that he has to go bullish on the chart. When he sees a pattern pointing to the bottom, it's a sign for him to what? To go bearish. All right, now when he identifies that pattern, what he does is to what? Run a back test and to find out how many times that pattern worked, all right, or find out the win rate of that pattern, because that's what you have to do as a trader. When you identify a pattern, don't just pick 1, 2, 3, 4 examples or scenarios and then judge and conclude that, oh, this works for me, let me just go hard on this pattern. No, you have to run a back test. You have to go through some back testing, try to see how the pattern performs in different market conditions, all right, in different market cycles, in different market regimes, okay, in situations where there is low volatility, in situations where there is high volatility. You need to know what works, okay, how the pattern will perform. All right, so these are some of the things that a trader needs to do to develop an edge, because at the end of the day, it all begins from an edge. You need to have an edge before you talk about anything else. Okay, you need to have something that you can confidently say that if I follow this pattern, if I follow this process, there is a higher chance of success for me. Okay, that is what you first need to identify, your edge. All right, so once you identify the pattern and you run a back test and you see its performance, the performance doesn't have to be so good, so excellent, because a lot of you or a lot of traders out there are looking for crazy high win rates. They are looking for 80, 90, 99% win rate. I'm telling you, it's very hard to find in this imperfect market, because this market is full of, is full of a lot of engagement, a lot of reactions from traders. There are lots of things happening, in split seconds. So it will be very hard to find a pattern that is like 80, 90, 95%. All right. So don't aim for so much. Okay. Even a 60% is enough. All right. Also, you can have a win rate less than 50% and still do well in trading. And that's the beautiful thing about the market. You don't need to be right majority of the time to make money. All you need to do is to ensure that your winners are weightier than your losses. Okay, your winners are weightier than your losses. That's what you should be focused more on. All right. So what you have to do is develop an edge. All right. Find a pattern on the charts that you find, occurring repeatedly. All right. That looks promising. Okay. That you can follow and you can follow very well. Okay. Run a back test. Know when it does very well. Know when it performs poorly, because you need to grade it. You need to give it a score. You need to assess it to find out how well it performs in different or various market conditions. In a very trendy market, you need to know how well it performs. In a range-bound market, you need to know how well it performs as well. Okay, so once you develop your edge, then you develop rules for entries and exits. Because a lot of traders do this. They know how to analyze. They know that yes, the trend is bullish. therefore I need to look for some buying opportunities. But they are not really precise with their executions, and that is the problem. Okay, they don't usually have a strategy for entry and exit, because there are so many entry strategies out there. There are so many ways of analyzing the market as well out there. So for instance, in analysis, in technical analysis, a trader can use basic pure price action to analyze. A trader can use smart money concepts. A trader can use ICT concepts. The trader can use Elliott wave theory. The trader can use harmonic patterns. The trader can use classical chart patterns. The trader can even use indicators. Whatever process or whatever style or method you use, what you have to know is that it must give a positive expectancy. All right, meaning whatever strategy you use, you must ensure that there is an edge for you to use. Because what happens is you can't just assume that, oh, this strategy is the best. No, the strategy in itself can't really work as it should if you just grade it that way. Okay, because a lot of traders feel like I have the best strategy out there. Okay, a lot of traders always boast that they claim to have the best strategy, but it's not about having the best strategy. Okay, it's about having the right edge. So it is the edge that matters here, not really the strategy per se. Okay, so whatever style of analysis you use, just make sure you master it very well. Okay, and then you master the executions as well. How you enter matters. How you exit also matters. Okay, you can have a good way of analyzing, but if you don't have a precise way of entering, it can be a problem for you. What happens is that you might enter anywhere you want because your analysis says we are going bullish. So you feel like any pullback I see, I will execute. No, have precise entries. Example, a trader can have a precise entry level based on the Fibonacci 2. So the trader can say, I will execute only when price comes to my 61.8 level. All right, that is a good, precise way of entering the market. A trader can say, okay, I need to see a liquidity sweep somewhere before I execute my trade. That is a precise entry model. Okay, another trader can say, I want to see a pullback coming down to a supply or a demand area. Another trader can say, I need to see price moving towards, a zone, all right, a particular zone or a particular level or a particular support or resistance level. These are precise. Okay, don't have a vague, approach when it comes to execution. Because when that happens, emotions will take over, and wherever you see the market goes, that's where you enter. Okay, so have a precise way of analyzing and have a precise way of entering and exiting as well. Okay, then the next thing is discipline. The discipline to follow your strategy, because a lot of traders are struggling with that. They have a very good system or a good strategy, but they lack the discipline to follow it through to the end. When that happens, you will not really know how well your strategy performs. Are we okay? So what happens is this. A lot of traders can analyze the market based on their strategy. They know that they are supposed to enter at the break or at a retest of a certain level. What happens is emotions creeping. Then what happens is they tend to enter prematurely. Okay, now when they enter prematurely, they enter because of the fear of missing out. They know, they have stated it in their plan that they need to see price retrace or fall to a certain level, but they don't have the discipline to stick to it. Okay, when that happens, you realize that the trader will trade a very good strategy poorly, and that will lead to poor results. Because remember, the strategy alone will not work. You can trade the best strategy poorly and gain poor results. That is the reality in trading. You can trade the best system out there or the best strategy out there and still get poor results because your executions are poor. the way you approached the strategy is totally wrong. Okay, so take note of that. All right, so it's important to have the discipline to stick to the rules of your strategy, because that will really be very important. Because if you are able to do so, then when you are journaling and you are trying to assess your performance as a trader, okay, you try to look through your results, your track record, and you try to identify, what you did wrong, what you shouldn't have done, and all that. Because for you, all that you did was to follow your rules, and you did that very well. Okay, you followed the system very well, following its rules. You followed its rules very well. Okay, but when you don't have the discipline to stick to the rules, what will happen is when you assess your performance at the end of a period, what will happen is a lot of the times the strategy can't bring out, you can't see the best out of the strategy because you executed it poorly. So at the end of the day, it's not like the strategy didn't work. No, you didn't work. You didn't use the strategy properly. Okay, so at the end of the day, if someone should ask you, so how well or how well does your strategy, perform? You will not be able to give a good answer backed by data, because you know that you didn't execute the strategy properly. So at the end of the day, you are not able to back your strategy with data. So discipline is very important when executing strategy. All right. And the last but not least is risk management. Risk management. Because one thing about risk management is it helps in your psychology. In our previous sessions, I spoke about the relationship between psychology and risk management. They go hand in hand. If you risk properly, what will happen is you will have the mental framework to follow your plan or to follow your strategy. That is the reality. But when you use oversized positions, what happens is that you tend to invoke the emotions in you. That is what they do. Oversized positions tend to invoke emotions in you, and then you tend to execute not based on your rules or your plan, but based on your emotions. And we don't want to get to that level, because once we start trading with emotions, the results or the end results will not be good. We want to desist from that. We want to, execute our strategy robotically. Okay? There are rules to follow. I want to see this, then that before I hit buy or sell. Period. Once we do that, our job is done. Then we repeat over and over and over again. That is how it is. Okay. And also, I must say that you don't need to have so many strategies, in trading. Just master one good strategy. All right. You can master it on maybe just a single pair or a few pairs. Master it very, very well, and you'll be better off than a trader who hops from strategy to strategy. A trader who hops from strategy to strategy, many of the times he's looking for perfection, but he may not admit it, but he is really looking for perfection. Okay, because you know that you can trade a very good strategy, and then in the first week or first month you have a negative, performance. It's not because the strategy is bad. Maybe perhaps the market condition is just not good. Okay, but a lot of amateur traders will judge the strategy wrong and say that no, this strategy doesn't work because in the first month I had a negative performance because the strategy I followed the rules, but I still didn't make money. Okay, and that is the mistake a lot of traders out there make. I know so many traders who have good systems and good strategies, but they still feel like they are failing. Okay, one thing I would like to add before I sign out is we have to be very careful about the haste of making money from trading. Patience is very critical here. Patience is very, very important here, very crucial. In this market, money is made patiently, not instantly. Okay, once you are a patient trader, you have something very powerful. Because when you go out online and you see majority of traders, making losses or losing in the market, it's not because of the market. Many a times it's because of the trader. Okay, you have to be really, really disciplined. Okay, and be patient. Be very, very patient when trading, because it will go a long way for you. I know a lot of traders who are adopting shorter ways of making money, like scalping. I'm not saying scalping is bad, but the reason for them going to scalping is because they feel like the more they scalp, all right, the more money they make. That's psychology. That is not really the market doing anything. You feel like the more you trade, the more money you make. But in this market, the less you do, the more you make. Okay, so I would like to end and ensure all traders out there that there is no perfect system out there for you to trade. Okay, because the best of strategies can be executed poorly and it will lead to poor results. This is Wilson from Geldex. Have a lovely day.